All right, welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Higher stocks, Micron, and China-related names giving the market a nice boost today. We'll discuss and debate with the investment committee. Joining me for the hour here at Post 9, Josh Brown, Liz Young-Thomas, Jim Leventhal, Brenda Vangelo's back with us too. Let's check the markets here. We do have green across the board for all of the majors. Pretty equal gains across the board. Chips today, Josh, after Micron. China after stimulus. What's on your mind?
I think it's really interesting that we now have this story of a resurgent China added to the mix. I don't think it was necessarily a negative all year. U.S. stocks did fine. U.S. economic data was largely unaffected by what had been just years and years and years of continued malaise. The Chinese stock market had lost about $6 trillion from its high in 2021. So it's not like that was a negative. I would just say it was like a piece that was off the chessboard. Now it's a piece that's on the chessboard, and it's drawing attention, and it's helping to move U.S. stocks that are very much related to China, dependent on China for future revenue growth, et cetera. And it's kind of a new narrative. We had this with the Nikkei last year and this year, hitting a 33-year high after just decades in the doldrums. That kind of changed the narrative around Japan. And if they can accomplish something similar to that in China, again, it doesn't mean throw out your U.S. stocks and just go buy all these Chinese things, but it's another force within the market. It could be an uptick in local consumer demand there. It could be an uptick in imports. And indeed, when you look at some of the biggest movers in the market right now, you see metals and mining. The median RSI in the S&P metals and mining sector is only 63. These stocks have made a big move, but they're not yet overbought. 69% of the index is now above the 50-day. 53% or half are above the 200-day. So you have stocks that are now in their own individual bull markets that, other than Jimmy, we don't really talk about these names. Alcoa up 9%. Freeport Mac up 7%. Even Cleveland Cliffs, which might be the worst stock in the world, up, I'm just kidding, up 6%. So again, and consumer-related companies are ripping too at the same time. You look at like Wynn, for example.
Yeah.
So it's just, it's a new piece on the chessboard. It changes the narrative away from the what's the Fed's next move. I think it's cool, and I like to see new stocks start to hit that bull market list.
We'll get to some more specifics on that. Liz, we had asked when this news came through the other evening as to whether it was a game changer for the kinds of stocks that Josh is talking about. It certainly takes one of the negative overhangs of the bullish story off the table.
Sure. So let's back up a little bit and look at what we expected from China coming out of the pandemic. There was this big expectation that the Chinese consumer would come back and drive luxury good purchases, drive consumer product purchases from U.S. companies and European companies, and then China couldn't get off the mat, and they didn't come through with those purchases. And what we've seen, the reason for this stimulus, what we're seeing is that China was in basically a deflationary spiral. They have a really struggling property market that can't quite get out of the woods. And they've got underlying consumer demand. If you look at just retail sales domestically in China, they've been under pressure for a while. But the Chinese economy is actually more dependent on corporations and on government spending. So that's why the stimulus package focused on things like buybacks. It allows people to refinance mortgages at lower rates. So it's indirectly helping the consumer, but it is focused on businesses, which is boosting the stock market. I think the broad message here is that central banks around the globe are saying we're here to support the market if we need to. We're definitely here to support the market when it's clear that we need to. And that's been a bullish signal for stocks.
Yeah.
The one thing I would say that we still have to watch about the stimulus, I don't think that this particular package solves it all. The property market in China is still in trouble, and Goldman Sachs estimated that it actually needed 8 trillion renminbi of spending. This will really only amount to about half of that. So maybe there still needs to be more to come. But in the meantime, in the near term, this is a positive signal.
All right, so we talked about some stocks. We talked mining, Freeport up big. Jimmy, LVS, Wynn, that's yours.
Wynn's fine, yeah.
Up big.
Yeah, I mean, it's up big on the presumption that the stimulus package will get more gamblers to go to Macau. Side note, a couple of months ago, Macau had its biggest gaming month since 2019, since COVID, so it was already on its way back. This just adds fuel to it. Whether it's Wynn or Cleveland Cliffs, Josh, thank you for making me laugh.
Love you, Jimmy.
I know, I love you too. But here's an important point to make, and this is picking up on what Liz just said. These things are not going to go up in a straight line. Today and this week, what you're seeing is a lot of short covering. You can look at the short interest on Cleveland Cliff. It's tremendous. So that's what this initial surge is. Liz is likely to be right. This isn't like a cure-all that's going on here, so you may give a little back. But the important thing is, in the long run, this should put a floor under things like steel prices or other metal prices. So it forms a new base for these stocks from which they can go higher. I just don't want people to think that, okay, every day from now it's going to be up 7%.
So I said on Tuesday, this is a bigger deal than we're making it.
You did.
And then yesterday, there was like a little bit of a pullback in the theme. But then today, it surges higher. Short interest is a good point that you made. On the Chinese stock side, I don't think a lot of people realize the FXI, which is basically, it's not Chinese tech, it's like large cap China, right? 61% of the FXI float is short still. I doubt next week the data will still be 61%, but that's why I think it's underestimated. But the second part is, it's not just monetary policy and stimulus from the central bank. This is a joint press conference with the head of like financial regulation. They were going to stop arresting their founders of tech companies. They're going to be stimulating private equity and venture capital and a lot of things that have nothing to do with central bank and everything to do with mentality. They don't want to be left behind as the rest of the world refocuses on their own capital markets.
Bren, we've been looking at luxury retail for a while now, and they have not done well because of concerns about the Chinese consumer. LVMH rallying big. Estee, that's yours, EL. You own that. So now is that a game changer for how we're thinking about those kinds of stocks?
I think it could be, but to Jim's point, I think we need to see if these stocks are going to work over a longer period of time. We need to see actual evidence that the Chinese consumer is turning a corner and is beginning to consume more in order for these to continue working versus this, short covering period that we're in right now. But I do have hopes that that will continue, and it's great news in our view that China has turned the corner and is finally stimulating at a greater level. I think it's great for the global economy in general because so many other parts of the world rely on China. Europe's economy is so export driven, and China is a huge consumer there historically. Same with the U.S. To a certain extent. But I do think the one risk, if China overstimulates, is that China has been exporting deflation around the world, and that has helped solve our inflation problem. If that dynamic changes, that could change the inflation story here, but that could be a long ways off. But for now, I think it's great news that China's government is finally starting to stimulate them.
Caterpillar, record high today. You have a lot of the China tech names, not surprisingly, are up. Could show a bunch of those. PDD, Baidu, Alibaba. Your K-Web was the contrarian pick for this year.
Am I winning that thing yet?
Maybe you might be now.
All right.
But maybe this resets those trades too, in part because of the regulatory concerns that were an overhang over tech, especially out of these stocks, and why some had said they were uninvestable. Apparently, that dynamic is changing too.
Well, you're talking about stocks that Tapper said it better than I will right now. I'm not going to go into so much detail, but the single-digit PEs. So you don't have to be like bullish on the Chinese economy to understand that taking risk there can be rewarded without much change. Jim Grant has a great saying, good things have a habit of happening to cheap assets. So you don't have to believe that they're all of a sudden going to have this miraculous economic recovery. You just have to believe that maybe 9 times earnings and companies sitting with 20 and 30% cash as a percentage of market cap is probably too pessimistic. That's like enough for a 20 to 30% move here.
And flooding the zone with the level of stimulus that they're doing now, and we speculate they would not hesitate to do more is key. Rob Sechin joins us now because he owns Alibaba, and maybe this is that moment that he's been waiting for. It's good to see you. I appreciate you being with us. today. How are you
How
thinking
relaxed
about
this guy is.
He should be today. How are you thinking about all this, Rob?
Well, Scotty, we've been underweight China for the last several years. It's been a terrible market, obviously, in a powerful downtrend. If you look at the S&P versus China, S&P's up 35%, China's down 13. And by the way, emerging markets and international developed are also in the positive category. I would say that we're not ready to make a tactical shift, even though these stimulus measures and the commitment by policymakers act like a put option. I think you have to ask yourself, is this time, is it different? It's something that we're debating internally. I think our point has been that as you see volatility, there are opportunities to buy the types of companies that Josh talked about. And we've been focused on those companies with attractive valuation, competitive advantages, leading profitability, et cetera. And it's led us to names like Baba, Ping An, and Tencent at different times, two of which I've talked about on the show. Baba we added in December. It's up 50% since. Obviously, it's a technology powerhouse and one of the biggest e-commerce companies in the world. As Josh said, it trades really, really cheaply. It's a capital-light business. Great way to get exposure without taking all those geopolitical risks because the price protects you. Ping An, the insurance company, one of the largest insurance companies in the world and dominant in China, trades at 6 times, less than 1 time sales. And then Tencent, which we added 2 weeks ago, it's up 20% in 2 weeks. It's the largest company in China. It's a tech conglomerate with billions of users, a little more expensive, but these are the types of names that you can selectively pick off without going overweight the Chinese index, which is fraught with other risks that are geopolitical. I do think it's an opportunity to buy some other things. And 2 weeks ago, we also bought Hermès as a result of this type of possibility. So anyway, good market to think about for sure.
Yeah. No doubt. Plays right into the story. I appreciate you joining us, Rob. Thank you. I wanted to catch up with you on this news and talk about those stocks. The other big story, of course, we mentioned at the top, the semis today, they were surging because of Micron's results. Beat top and bottom. Guidance was better than expected. Stock was ripping. Chips were too. Then you had the headline from the Journal that the DOJ is probing Supermicro. So it took a little bit of steam out of that trade, though what had gone negative, well, NVIDIA was positive. Now it's a touch negative, but it's taken a little bit of steam out of that space today. How are we thinking about these stocks now? Because it's been a real point of concern. Many, whether it's Micron, Lam, Intel, Applied Materials, ASML, NVIDIA, Taiwan Semi, and AMD are all considerably, for the most part, off of their recent highs. Micron's a good example of that. It's down 31% off of its recent high, even though it's up 20% week to date.
Yeah, I've never successfully wrapped my arms around the driving force behind Micron. On the one hand, it seems like such an obvious thing. It's a commodity play within the semi space. If the commodity is bid, the stock should work. But that always depends on like the time frame in which you're trading or you're investing it. So I'm not there and I'm not the right person. But I would like to speak about the chip equipment names. KLA is up 3% today. Lam Research up 4%. AMAT up 4%. These are like the mid-cycle plays in semi. They're not on the front end per se. But once they start getting those orders rolling and inventories have been cleared out, I do think you get enough visibility that you can be in those names and you could benefit and not necessarily be beholden to any one specific chip design winning or losing a contract with Apple, for example. Like those are just the workhorses of the space. They do business with everyone and they broadly capitalize on the upcycle in semis. So I don't think it's a secret that those companies are doing really well. But you see them leading on a day like today, and I think there will be many such days where they look better than many of the individual semiconductor companies themselves. We brought Bill Baruch on the other day to give you an options trade heading into the earnings report. He's going to join us now to review what he did and what he's doing now. Thank you for coming on. So what's the deal with this trade now? Just refresh our memories for our viewers, the trade you put on and now what you're doing.
Yeah, this was a very speculative trade ahead of earnings. I bought for myself the 110, 125 call spreads that expired December 20th. So it gave me time on it. I paid $2.75. Now, given this move here, with Micron after earnings, I have exited this trade. I have taken it within about the first 45 minutes after the bell opened. I legged out with an average price of 612.
Okay. So you're done with this now. That's it.
Yeah.
You're not going to put another position on in Micron. You wouldn't own the shares outright. I mean, give me an idea of how you're thinking about it from here.
Yes, we own Micron in portfolios, and it's about number 15 coming into the day, probably a little higher now. I love the name. Now, just give you an idea here with the option structure itself. The option spread is $15 wide. And every time I come on the show and talk about these option trades, I talk about that back of napkin math. You want to take the price that you're paying and divide it into the width of the spread. And you want that number, you want that result to be at least 4, because that helps your profit potential. So in this case, it was 15. And half of that spread is $7.50. You know, if you're paying divisible by 4, you can double that pretty well. And we paid $2.75, and a double there would be almost $6. So that's where that comes into positioning. So $7.50 would be the max. In my mind, I got close enough there this morning on the open. I'm locking this in. I'm stepping away. Bulls make money, bears make money, but pigs get slaughtered. Now, I love the name, high bandwidth memory. You got to know this. And viewers out there, you have to know this. The total addressable market, TAM, they talked about in the earnings call yesterday. In 2003, it was about $5 billion. In 2023. In 2025, it's going to be $25 billion. Now, they're not the only name in the space, but this makes the chips more power efficient. This is going to be a big name in this chip space as AI becomes bigger and bigger here in the years to come.
All right, and I noticed that you also trim nearly everything in your concentrated portfolio. Let's cover that quickly, if you could. Meta, Apple, Microsoft, Amazon, Nvidia, Marathon, Alphabet, Broadcom, Tesla. Why did you trim 9 of the 10 stocks here?
Yeah, we are a little cautious. We in this concentrated fund, you know, I don't buy any put protection, and now we do in our main portfolios some slight put protection to kind of get us through this next couple of months, the next couple of weeks, sort of thing. Now, we don't protect our downside of this concentrated portfolio, and I saw the way the market had reacted out of this. It's been a massive run, and sometimes it's nice to just take some chips off the table. We went from about 20% cash down to 5% cash on September 13th, September 14th. This has been a big run out of it. So what we've done here is get back to about 18% cash. You know, we have a lot of data coming out over this next week. There's a lot of exuberance in the market. And a couple of things from the macro standpoint, you know, I know Liz, I think it was Liz that talked about exporting deflation from China. And that's one of the things that now that they're doing this stimulus is actually going to stop that. But with crude oil, it's rolled over pretty sharply here today. Now, I don't want to get too macro, but it's really would offset what China's doing. And I don't like to see crude oil rolling over. The bonds are lower, meaning yields are higher. I think the market is a little wonky right now. And given the election in 2016 and 2020, we've seen big run-ups after uncertainties were removed after the election, no matter who won. And I think we're seeing some front running of that right now. So I'm just going to take some chips off the table. It's been a nice run, and we're going to watch a few rounds here for a moment.
All right, thanks. We'll talk to you soon, Bill Baruch, updating us on some of those trades. So let's talk about some of these mega caps. So he trimmed some names. Record high for Meta today. Brenda turned lower, though. They did have their Connect event yesterday. Target goes to 640 from 610 at JPM. Target to 630 from 563 at B of A. What do you think about what you heard? What do you think about this stock from here?
Yeah, I continue to think the company is well positioned. Stock is still relatively valued well versus some other peers in terms of multiples. But I do think I like what we heard yesterday. I think wearables is the wave of the future. We're obviously not there yet, but I do think the day is going to come when we're not all staring at a phone. We have something that allows us to live our lives without being glued to a device that takes our eyes off of things. So we like that element. And we can't ignore that Meta, I think, has done an excellent job of really blurring the lines on their platform between advertising and entertainment, and they've done a tremendous job, and I think they're going to continue to be very relevant in the digital advertising space. I know there's questions about whether other players are going to be relevant in this new AI-driven world, but I do think that Meta is very well positioned.
All right, some defense today of Apple because, you know, you did You did, Josh, have a bunch of notes yesterday questioning demand for the 16. Evercore today says solid demand, at least in the U.S. Yeah, maybe calling off some of the bears on this story about the release of the phone. What do we think here?
So, two things. Number one, there is no historic evidence that pre-orders are a meaningful tell on how Apple common stock will perform in the ensuing 12 months after the release of an iPhone. Zero. It does not exist. That's really important if you're an investor and not somebody writing for Wired magazine. But number two, and more important, the analyst cites actually more demand. They were actually surprised to the upside than what they had thought. And I think that what's important to say is this is before these AI tools are widespread enough for anyone to even really be talking about them, let alone using them and showing them off. The cascading effect that happens when Apple does have a big technology upgrade, which, let's be honest, is not every time they release a phone, the cascade is people get these new tools in their hands, they start to share via text, SMS, etc. with their friends what their new phone could do, and then all of a sudden you have a blockbuster phone on your hands. We've seen that in several iterations, and there is that possibility that the things that Apple included, and I think the AI is not, mind-blowing at this point, but still, it might be enough that you get that cascade, and all of a sudden people start to say, wait a minute, they're selling more of these phones than they thought, and these AI features are really catching on more quickly than we thought. I don't know that that will be the case, but I think people are starting to think that way, and if it is the case, then this stock has not done the move that it will do if it turns out to be true.
The other things I want to hit before we take a break, small caps, Bren, up sharply today, and waiting for this moment post-Fed cut that they were going to start working. You do own the IWM. What's your outlook here?
So we continue to think that there's more room to go for small and especially mid-cap stocks, though, as well, because mid-caps have performed very similarly to small caps, and those are higher quality companies. There's not as many unprofitable companies in the overall universe there. So we continue to think that there's opportunity, more leverage to the domestic economy, where things are still relatively strong. So we continue to think that has legs as interest rates come down.
Energy, the weakest today, notable, certainly their week to date. It's also down 2.5% as a sector. I do want to get to a couple of moves not related to energy, but nonetheless, Jimmy, to you. You sold Union Pacific. Mm-hmm. You bought Wabtec, Dallas.
Yeah, and the context here is that the market may well be fully valued, maybe not, but I think it is, and so you got to pick your stocks carefully in that environment. Union Pacific and Wabtec, which is Westinghouse Air Brake Technology Company, that's a supplier to the railroad company. So it's the same space, but it's got higher growth than Union Pacific, basically the same valuation. And for me, again, coming down to stock picking, every railroad has its own idiosyncrasy. Something like Union Pacific may be more exposed to the Powder River Basin of coal. I don't want to worry about geographical exposure. I don't want to worry about product mix. I just want to express that the U.S. economy is humming. Things need to be shipped by rails. And Wabtec basically builds locomotives. It refurbishes rail cars. It does all the things for all the railroads that they all will need as this economy continues to expand.
Okay, we're going to take a quick break. We come back. We're going to hit some more committee stocks on the move today. We do have an earnings pot for Accenture, pullback for another name. We'll run through a bunch of stocks next. Let's do some committee stocks on the move today. We do start with Accenture. Brenda, it's yours. You bought it in early August. Buyback today, $4 billion. Revenue was above estimates. What do you think?
Yeah, I think the real story here is from a bigger picture perspective. We're in an environment that is so hard to navigate for so many companies trying to figure out AI, how to build up their tech stack, how they're going to be able to utilize AI. That I think they're looking to companies like Accenture to really either outsource the whole thing or take on more of a consulting relationship. So I think we're in the early innings of this, and then the company is incredibly well positioned to benefit from what we think is going to evolve over the next 5 years.
About Pfizer, Josh, they withdraw their sickle cell disease treatment on a risk of complication and death. You own the stock, obviously.
Yeah, this is like the worst stock. I mean, I'm not down on it. It just doesn't. I want to poke it with a stick. It's the wrong stock for what's happening right now. It has nothing to do with interest rates coming down. It has nothing to do with Asia waking up. So it's kind of like in its own world. That being said, They do have an earnings report coming up and a big update for shareholders, and I think that could serve as an upside catalyst. But for right now, it's a 6% dividend yield. You sit there, you collect the dividend. It seems to have a pretty solid floor here in the high 20s where I own it, and I'm not expecting anything much until they actually have something positive to say.
Jimmy, I have the top line results from phase 3 Parkinson's disease drug today. We can take a look at that stock. It's down slightly. You on that?
Yeah, this has been a steady long-term performer. I expect it will continue. It's completed the one thing it needed to do, which was get rid of Humira exposure, and they've done that by moving to Skyrizi and Rinvoq. Now they're getting some fruit from the acquisitions that they've made, particularly in neurology. We all know Parkinson's is a terrible disease that's growing, and so this is very good news, and it should continue to propel the stock higher.
What about Disney? Reiterated buy today at Needham. Price target's 110. There's a report they're laying off several hundred corporate level employees.
Yeah, I want to be careful when I say it's had a strong bid over the last month. Anybody can take shots at that and note that it's been a terrible stock for a few years now. However, I happen to believe that it's coming out of some of the strategic things that it needed to do, the first thing of which was get streaming profitable. It's done that. Needs to close the Hulu transaction, should be soon. In the meantime, the stock has been held back by worries that the theme park and experiences division is not growing nicely. I will admit, it certainly is at a trough level right now, but with everything going on in the global economy, what the central banks are doing, what inflation's doing, I really do think we're at the trough in terms of the theme parks and experience business.
You own the stock too, Brent.
Yeah, I would say on the topic of theme parks, we just went through overlapping what was an incredibly strong summer of 2023 for theme parks and other travel-related experiences. So it's not that dissimilar from many other companies that really saw a huge pop in part of their business post-pandemic. But I do think that even though Disney has been an incredibly frustrating stock over the last several years, I do think things are poised to be better as on the streaming side in terms of new ads with some promotional activity and bundling that they've been doing. And I do think if we can look ahead to a year from now, that parks division is going to continue to do well and be relevant and have much easier comparisons.
We want to talk about the banks. Earnings are a couple weeks from tomorrow. Hard to believe here. We're talking about earnings season again. Mike Mayo out, Wells Fargo's analyst, with a preview, lowering estimates. How do we think about, Josh, these stocks, like JP Morgan, like you own, and some of the others?
So I think now that you've got the steepened yield curve, and now that you've got maybe a little bit more clarity on whether or not we're plunging headlong into a recession or just having a normal slowdown, into some more monetary stimulus in the form of rates coming down, I feel like it's like less unclear than what it was, 6 months ago, a year ago. So I like these stocks. They've gone up a lot this year. Let's not forget they're one of the better performing sectors. And my argument has been to focus more on the companies with capital markets exposure rather than just traditional banks. And it sounds like that's what this note is saying. So it's steering people into the JPMs, and I think that's right. The other thing I would just point out is maybe look outside of the major banks when you're thinking about financials. Insurance companies, I think, are still set up to do well, even though they've rallied a lot. And then, of course, I like that secondary play on capital markets, the index providers, the asset managers. I'm long NASDAQ, which looks fantastic. So there's a lot more you could do than just pick amongst four gigantic banks.
Liz, Adam Parker has a note that says none of the largest 10 financials by market cap are value today. He goes through a bunch of names. So what about this space now that rates are coming down?
Yeah, so first of all, financials are not a homogeneous asset class. And when you look at the performance difference between insurance and banks, it's been really wide, particularly over the last 3 months and the 1 month period. So the odd thing to me about banks right now is that they're not acting particularly well in a period where we supposedly have priced in a soft landing and we should be seeing more cyclical activity. And in a period, as Josh mentioned, where the yield curve has steepened, which should help banks as far as net interest margin goes. Usually the reaction in the market after that first rate cut is that, and even before that first rate cut, is that defensives lead. That has been the case this time. If we want to confirm, if we want to look to the market to confirm that cyclicality is back and that this soft landing can continue, we need financials, particularly banks, to come back into play here.
Okay. 2 weeks from tomorrow, as we said, we'll be talking about these earnings. Up next, Santoli. He's standing by with his midday word. Mike's with us next. We are back with our senior markets commentator, Mike Santoli, for his midday word. What are you thinking about today? The China news obviously coming through, and then Micron kind of saving the day, if you will, for these chips.
Yeah, you had really the confluence of a lot of what looked like pretty all across the board bullish drivers to open things right now. I think you have to at least notice the fact that the market sort of declined the opportunity, a perfectly good excuse to have this everything all in rally. It's much more rotational. It's much more, kind of what's working is working, but it doesn't have a lot of coattails. NVIDIA kind of stopped in its tracks, things like that. So I think that probably reflects in part the fact the S&P's been up, including today, 11 of the last 14 trading days, and it's up by 6% over that stretch. So it seems as if positioning came into today being relatively full. It wasn't as if, we were really spring-loaded for further gains. So it's net positive. I think the market still likes the good news from the weekly jobless claims. But, we're priced for a soft landing. If we keep getting evidence of one, we can make progress. But it's not going to come as a surprise to equities right now that things are pretty good.
It's still reasonably muted. I mean, but
yeah.
Right, maybe tomorrow, we just got to get through tomorrow. As much as we talk about the idea that the markets move beyond the inflation story, you still have you need the evidence. And tomorrow morning with PCE and core PCE, we're going to get it.
Look, when you're trying to land, you go through all the waypoints, and that includes making sure you're at the right spot for inflation tomorrow. I think you have to keep in mind, though, the market realizes the first week in a trading month has been the bad one, the last 2 months, and it's when we were leading up into the jobs report. So, if nothing else, that has to kind of be in all the algos by now.
Gotcha. I'll see you in a little bit on Closing Bell. It's Mike Santoli, our senior markets commentator. We got some calls of the day we still want to do. We'll do that after this quick break. Let's run through some calls. On holding, price target goes to 60. It was at 47 from KeyBank. Reiterate overweight, Jimmy.
Yeah, I mean, what a fun stock. I've owned this for about a month and a half. It's up 20% in that time frame. People who've held it longer are up a lot more. I think it continues. Now, somebody might say to me, Jimmy, how can you hold this when it's 40 times next year's earnings? Aren't you a value investor? At heart, I am, but I also note that this company is growing like a weed. Estimates are that it's going to grow 35% earnings per share over the next couple of years, and I believe it because there's a lot of geographies into which it can expand, and it's barely scratched the surface in terms of apparel. We all know about the running shoes, which everybody's gaga for, and they're just expanding the brand. There's a lot of room for them to do so. So I'm going to stick with it.
Who do you think he was channeling? You or me when he said somebody was going to say,
No,
Jimmy,
it's the
what are
world
you
at
doing?
large. The world at large.
Yeah, exactly. Exactly. Insecure. I mean, let's go. Okay.
What is it?
Proud.
2-on-1 tag team?
Proud.
Who am I tagging? I'm tagging Brent.
Tesla.
You're on.
All right. Tesla.
Exactly.
Tesla.
You're in.
Stock's positive on the year, at least it was. You still hold the stock, correct?
We do.
What's your view?
So we have this event coming up October 10th where I think they're going to talk about robo-taxi. We are not as positive on robo-taxi opportunity. We think it's going to take a long time. If we look at Waymo, for example, it has taken years for Waymo just to have one city, San Francisco, which is happening successfully. But nevertheless, on October 10th, what we would love to hear about more is the lower priced vehicle. And I think there is some chance that we will hear a little something about lower priced vehicle, which we think could be a positive for the story here. But otherwise, we know this is a controversial stock, but we think the company is still well positioned. Lots of other competitors have stepped away from doing 100% EV, and we think that just creates an opportunity for Tesla to continue to gain
The earnings are a week after the robo-taxi announcement. Okay. You think they'll use the robo-taxi announcement as a catalyst to say anything else, or that'll be very focused?
I'm hopeful that they'll talk a little bit more about the lower cost vehicle that we know is coming at some point.
Yeah.
And so I think that would be a great opportunity. Some are saying, they should have a separate event for that, and I think they probably should. Yeah. But I think we'll hear probably a little something about it, which could be a positive.
All right. We will take a quick break, and we will come back with finals next. Brenda, it's good having you back. What's your final trade?
Thanks. Great to be here. Palo Alto Networks. I think the company is well positioned with their platform approach to continue gaining market share within the cybersecurity space.
Farmer Jim.
Delta Airlines. There's a lot of news from Southwest Airlines today. If you get through the drama, what they're saying is that revenue per available seat miles is up, costs down. You like that?
Okay. Liz Young Thomas.
Healthcare, which is a risky thing to say going into an election, but it is the best performing sector usually in both steepening environments. And I think some of the growth money that comes out of tech needs somewhere else to go.
Yeah, it's performed not great this year, right? Healthcare, it's up 12% year to date. It's the second worst performer.
Pales in comparison to some of the other stuff, but maybe it's their turn. So if you've got money coming out of tech that still wants growth, as GDP growth stays healthy, maybe pharma and biotech is the spot.
All right, JB.
PayPal, one of the better performers over the summer, continues to break out. I'm long. I've rolled up my stop. They made a pretty, I think, interesting announcement on crypto and enterprise. I like it.
Good stuff. The exchange begins now.